Be sure to subscribe for more content.
What is up, ladies and gents? Welcome to the BigBC Finance Channel, and I hope you're having a very lovely day. So in today's video, we're going to be covering the SP 500, what has happened to it recently, and a price prediction for the near future, where we think the prices are going to be going. And of course, it's a little bit of a different video from my normal videos on this channel where I cover cryptocurrencies, but the importance of the SP 500 for crypto is that they are super correlated, particularly in 2022. So if I just show you this to preface this video, basically from the middle of June on the S&P 500, the prices sat at around 3,650, but by mid-August they were around 4,300. And if we take Bitcoin as our example, you can see in exactly the same time frame, mid-June there on Bitcoin, we saw prices go from 17,800 all the way to its peak at 25,200-ish. So there's an undeniable strong correlation between Bitcoin and other altcoins with the stock market in general, and that is why we follow what the stock market is doing, because the stock market makes a major move, Bitcoin and altcoins and pretty much every single cryptocurrency is going to be following. And right now on the stock market, I do think we're at a very critical point. So in this video, I'm going to be making a price prediction as to where I think the price is going to go to on the stock market. So be sure to stay tuned for all of that. And of course, if you appreciate the daily analysis on this channel and you're one of the 86% of people that watch my videos that are not yet subscribed, be sure to hit the subscribe button if you like this content. So without further ado, let's talk about the S&P 500, and we have the annotations back on the screen. So basically, the first thing I have noticed about the whole S&P 500 setup is that at the moment in 2022, we have had a repeating pattern on here. Basically, since the start of the year, we've come down and we've completed a series of successful bear market rallies. The first one really being in March 2022, when the prices came up on the S&P and then shot back down soon after. We came up to this resistance in purple here, and we basically fully retraced this whole pump that we had and continue to head down on. And the second one that was really significant was this one from June to August here. So again, prices came up to this purple resistance here, this line where prices have never come above, and we just again shot straight back down. And most recently, what we have seen in the stock market is from mid-October all the way to the start of December, we've seen prices pump towards our resistance in purple again, and again we saw the prices break down from that. So if history were to repeat itself, what we should see is prices head down to create new lows on the S&P. Now, it's obviously not going to be as simple as that, but this is kind of the premise of why we're bearish here on the stock market. Another reason is the fact that we've seen some sort of rising wedge. So this rising wedge is an important chart pattern. It's a bearish one, and basically it's two trend lines that connects the tops of the price and the bottoms of the price, and they're both head in the same direction. And in the case of the rising wedge, they're both pointing in an upwards direction, and they're both converging into each other. So what we would expect to see is the prices break down from a rising wedge, and the price target of that being the first test of resistance and support. So basically we get this first test, which is in this region here. We get the first test of the support, we measure the distance between them, and we drag the measuring tool to wherever the breakout was. And if we use this as the breakout, which looks like a very convincing breakout, we should get a price target on the S&P of around 3,697. Now, another notion to support this bearish action here on the S&P is the fact that the prices have been rejected by this yellow line here. This yellow line is a very significant one, the 200-day moving average. Now, the 200-day moving average kind of determines the trend here on the stock market. So when we're in some sort of bearish trend, this 200-day moving average typically acts as a resistance. So in August, it was a perfect resistance along with that trend line, where the prices got up to and bounced straight back down. And in the case of this rally that we've had, we actually did see the prices peep above, but what we saw here at the very top was a very weak candle. We saw momentum drive the prices above this 200-day moving average, but on the very next day we saw a very weak momentum candle. It kind of resembles some sort of some evening star pattern there. Basically, we saw a very small candle there, and prices didn't like staying above this 200-day moving average all too much. So that's why we saw the ensuing price action in the downwards direction from that. So that's another reason to be bearish here. We basically look like there's no more momentum going in the upwards direction. Buyers are running out on the stock market in general, and it looks like we're going to be heading down. In addition to that as well, if we have a look at the MACD and the RSI, we do get a very strong sell signal from the MACD. So basically, if I do zoom out, throughout the course of 2022, we've seen a MACD crossover every single time the bear market rally has completed. So back in August, for example, we saw a crossover like this at the very peak of the bear market rally. We saw a crossover at the March bear market rally, and we saw a crossover for the start of 2022. And what we've seen over the past few days on the MACD is yet another crossover, signaling the completion of a bear market rally. And now the red bars are signaling that the momentum is generally bearish here on the S&P. So this supports further downwards movement until we see another crossover on the MACD there. The RSI not so much showing us a signal. We've gone from a value of around 62 down to 49, so not really all too much in terms of the value alone. But what I do see on the RSI on the 1-day chart is some sort of trend line break. So just as we can draw trend lines on the price, we can draw a trend line on our indicators as well. And basically, if we draw a trend line connecting the lows on the RSI there, we see the RSI go in the upwards direction, and what we see is exactly the same time we see a trend line break on the price on the S&P with this rising wedge here. So where my cursor is right now, we also see in exactly the same time a break down below this RSI as well. So the RSI actually confirms that we should be seeing this rising wedge, because we see a trend line break on the RSI at the same time we see it on the price. So the MACD kind of confirming the sell signal with that MACD crossover there, and the RSI kind of confirming a trend line break. So that's what our indicators are saying, both of them suggesting that we're bearish. But I do want to say that I don't think things are so black and white here on the S&P, because at the moment we're in this area at around 3,950-ish on the stock market, which is a super important area. And this area is basically some sort of battle zone between buyers and sellers. Have a look at this. So if we get the fixed volume profile range, and this fixed volume profile range kind of shows us where the majority of the liquidity is, where buyers and sellers are mostly making their transactions. And typically you use it from the swing low to the swing high. So we get the bottom of the price here as the bear market rally starts, and we drag it to today. And what you'll notice is that we have this volume profile here, and it shows us that by far the majority of the liquidity is at this 3,950, 3,960 region. You can see these small candles here resembling where buyers and sellers are fighting it out. And liquidity here is pretty much higher than anywhere else in this bear market rally. So the size of this bar kind of says it all. It's pretty much that most buyers and sellers on the stock market are transacting in this area. So this is kind of like a battle zone. And so this line here is the zone of control. Basically, if buyers can get the price of the stock market above here and kind of consolidate well above this zone of control, then we can see the stock market continuing to rally. But of course, if we see the prices dip underneath or continue to dip underneath this red line here, then we have sellers taking over, and we should see that ultimate price target of 3,690 from that rising wedge. So this is the significance of the volume profile, but it doesn't really stop there, because what I did was actually I dragged this volume profile back. So if we just drag it back in time, for example, even to the last bear market rally, what do we see? From August to now, we still see this 3,950 level being the zone of control. So literally, majority of buyers and sellers are still transacting in this area of any area on the stock market since August. If we just zoom out and drag it back to the start of 2022, and we just have a look here, basically the zone of control is still 3,950. So if we look at the whole price action from the start of 2022, majority of buyers and sellers are still transacting at this 3,950 level. Quite remarkable. In fact, if we just zoom out and we just drag it all the way to the start of the COVID drop here, so let's go back all the way in time, what we'll see is the zone of control is still in this area here, slightly lower now at 3,890-ish, but it's really, really remarkable, because all this price action that's happened over the course of 2 years here on the S&P 500, and basically the zone of control still remains within this area on the S&P, literally 3,950-ish. So very, 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 very important area here on the stock market. Basically, if we see a price move in either direction, that could tell us which direction investors want to take the stock market, whether it goes up or whether it goes down. down. So that's the significance of that. Furthermore as well, a good case for the bulls here on the S&P 500 basically. And so if we go on a lower time frame now, the 4-hour charts, this yellow line now becomes the 100-day moving average since we're on a lower time frame. And this 100-day moving average does a good job of showing the intermediate trend. And what you'll actually notice is that the S&P 500 has done a very good job of staying above it. So here, for example, it's been used as a resistance. We're coming on the way up, but the yellow line has kept the prices down. Eventually, we did bust above it. And since the S&P has been above the 100-day moving average, it's not gone down below it without a fight. So this 100-day moving average in the intermediate trend, the S&P is still bullish. So this is another hurdle the bears have to overcome. On the shorter time frame, exactly the same story, but now this yellow line represents a 25-day moving average, a good indicator of the shorter term trend here. And basically exactly the same. Look how the price really respects both the 25-day and the 100-day moving average. And literally this is going to pose a massive hurdle for bears to get below this kind of level here. So if the volume profile wasn't enough, then we've got the 100-day moving average and the 25-day moving average holding the price of the S&P up. And so what I think is going to be the driving factor of the price here on the stock market in the near future is whatever happens with this inflation rate data that's coming out on Tuesday. Basically, before the stock market opens on Tuesday, we're going to see core inflation and inflation come out. So basically, we need this to be at least as good as expected or better than expected. And we can see that the consensus for the inflation rate is 7.3%, down from 7.7%. The core inflation rate at 6.1%, down from 6.3%. So if inflation is as good or lower than what the consensus reads, then we can see that being pivotal for buyers and sellers, or buyers to take control of the price here and for the S&P to head in the upwards direction. I do think the magnitude of the price going upwards, if it's as good as expected or better than expected, will probably be something to this effect. So I do expect prices to probably get up to this at least 200-day moving average here at around 4,030-ish. But if we do see inflation and core inflation worse than expected, then I do think that move down is probably going to be the largest red candle that we would have seen in a very long time. And my main reason for that is not just this rising wedge that we've seen here, but because if we have a look at this zone here on the stock market, there isn't really much liquidity there. In fact, there is a gap from the end of Wednesday 9th of November to the start of Thursday 10th of November. That was when the good inflation data came out, and so we saw a massive gap upwards. And so basically what I do think will happen if we do get a bad inflation data is that the prices are going to be filling that gap, and that would probably mean that by the end of Tuesday I do expect prices to head down to 3745, pretty much in one candle that looks like this. And so really what I will be doing is, for me, thankfully it's 2:30 in the afternoon. If you're from America, then it's going to be a bit early for you, but I'll be 100% watching what this does. Of course, if you are trading stocks just as they are, then you're not going to be able to buy and sell until the stock market opens. But if you have futures in the S&P 500 like I do, then I will 100% be selling the moment inflation comes out worse than expected, or I'll be buying the moment inflation comes out as or better than expected. So this to me will be the pivotal moment as to when buyers or sellers take over the price here on the S&P. I think that is what everyone is waiting for. Of course, not to mention as well, the following day you'll have the Fed interest rate decision. So the consensus for that is 4.5%. Basically, the majority of people think it's going to be a 50 basis point hike, but if inflation is bad, then that probably will be a 75 point basis hike there. So that is kind of the significance of a bad inflation rate report. You'll probably see that 75 point hike, which will likely plunge the economy into a recession. So it's very tense times, and we're in some sort of battle zone here at 3,950 on the stock market. Just by looking at the technicals, I do think we're going to be heading lower here on the stock market, just because of this rising wedge and the fact that we've been rejected at this trend line and the 200-day moving average. Additionally to that, if we have a look at the S&P tech sector, which makes up 28% of the S&P 500. We can also see that they're also seeing some sort of rising wedge here. Again, is very, very telling, this decline in volume as prices head upwards here on the S&P tech sector here. And if we do see this as a rising wedge, the breakdown should be down to around 2050 here, just by virtue of the distance between the first test of support and resistance. So the largest sector of the S&P 500 showing very similar signs of this rising wedge here. And so things, in my opinion, are looking bearish for the S&P 500, but it really just all depends. It really all just depends with what the inflation rate data says on Tuesday morning when it comes out. And of course, I will be prepared to see that come out live. And I do think it will be pivotal to determine the trend of the S&P over the coming weeks, in the sense that if we do see bad inflation, sellers are going to completely take over the price here. And if we see good inflation, then we're going to see buyers take over the price, since this level here is a zone of control for the fixed volume profile range since pretty much the start of 2020. So pretty crazy stuff here. And those are my thoughts here on the S&P really. So it's going to affect crypto in a very similar way. So if you're invested in cryptos, basically, if we see good inflation rate data, then we could see this as a potential bottom here on Bitcoin, where prices may start to head up. But if we see bad inflation rate data, that could be the precipitation needed to break down from this rising wedge that we've seen on Bitcoin. I talk more about this in my other videos, but basically we're seeing a similar rising wedge, in my opinion, here on Bitcoin. And I do think bad inflation rate data will be the kind of catalyst to push prices on Bitcoin down to around 15,400 at the very least. So that's kind of the implication that we're really seeing. And as for me, my investments in the S&P are pretty much short. I will be longing if we do see a bottom arise from the S&P 500, but at the moment it does still look like we're coming out of a bear market rally. So if you did find this video helpful and you haven't done so already, be sure to smash the like button and subscribe to this channel. But otherwise, thank you so much for watching again, and I'll see you in my next video.